Timing your exits is just as hard job as finding good entries. In this video we are going to look at how to get out of your trades. I really believe that the most important thing in trading is not how much money you can make, but how much money you don't lose. It should always be about preserving your capital. Now I'm going to show you step by step how I manage my trades. Let's take a look at this chart. I have entered here on a bounce of this rising trend line. I always set my first target by the same amount of pips that I am risking. So in this example, as I am risking 50 pips, my first target will be here, 50 pips higher than my entry price. Then I set the rest of the profit targets at the possible resistance zones. So, for this trade, I have 3 targets, here, here, and here. And I have opened a total of 4 positions. How come 4? You have only 3 targets there, you may ask. So let's get right into it. As the price has hit my first target, I close a quarter of my position and raise my stop to the break even for the rest. I am already in the profit, and from now on it's a risk-free trade. I have nothing to lose and I can only gain. As the price hits my second target, I close another quarter of my position and raise my stop again, this time at the price where my first target was. As the price hits my final target, I usually close another quarter of my position and put my stop where the second target was. So what happens with the last quarter of my position? I simply leave it open. Did you know that statistics say that investors keep their losing positions open on average twice as long as their winning ones? It's because traders close their winning positions to enter new losing ones. And that's because of human nature, which prefers certain smaller gains over bigger potential winnings with uncertainty. But let's think about it. At this point you have already taken profit for the bigger part of your position. Even if the price reverses and hits your stop now, which as you remember is already where your second target was, you would still make money. So why not try and squeeze maximum out of a trade, which can bring only gains? So from now on, we just keep trailing the stop for the remaining quarter of your original position. Whether you use ATR, moving averages, or just raise your stop once price have moved every 100 pips, at the time when price actually reverses, you will have made a simply good trade into a tremendous one.